Good morning, good morning, good morning. Right, I'm sharing my screen here. If everyone's got any difficulties in seeing that, let me know. Can you all hear me? Yeah? Let me know that you can hear me and I'll continue. Just someone could just drop a hello in the comment area. Good morning. Can you hear me? US 21. Is my audio working? Please let me know. Right. I guess not. So I'm going to leave and come back in and see if that works. Right, guys, can you let me know if you can hear me now? Okay, perfect. Right then. Okay, wonderful. Thank you. So, start of a new week, a new weekly template. Monday, opening balance. The US dollar is on a firm footing after last week's FOMC decision and following the dovish hike at the ECB. So essentially, with the US economy being in a much stronger position than other major economies, such as the Eurozone or the UK, for instance, you've got US yields higher and prospects of a higher US dollar that's been running now for several weeks, as we've covered for a number of weeks. Is coming up into this is the weekly chart here that I've just moved on to. So we're coming up into what is this? This is going to be March. March's highs as a target. Now, if we break above there, we're going to be looking towards the 107 handle, which will be the November 30th high. Right, so interesting days ahead for us this week, considering we're coming up into that resistance and the number of weeks that we've been long. The fundamentals argue the case for a continued run to the upside in the dollar. But technically, you're wondering whether we're going to have a pullback. Now then, for the week ahead, we've got a speech from Lagarde coming up in the next 25 minutes. And what have we got here? That Chicago data's come out. Pretty benign. And then tomorrow we have, what have we got tomorrow? Consumer confidence out of the US, and for the Aussie, CPI. So those are the main events in the near term, and then we'll have plenty of important data on Thursday and Friday, but we'll come to that and address those when we get there. Right, so We've also got Dallas Fed manufacturing for today. But the key event will be this speech from Lagarde. So once that's out of the way, we'll be good to go and trading normally, looking for our setups across the board. So as usual, let me know if there's any pairs in particular that you want me to go through, and I will address those. Right, no screen, you're saying. Okay, give me a sec. Share your screen. Okay. Right, so that's the US dollar chart that I was trying to show you guys. Right, we've got several weeks of longs, and we're coming up into resistance. If we can break above this resistance, we've got 107s on the cards, but you do wonder whether we're gonna get a correction. But all the fundamentals are pointing towards a stronger US dollar. Our fan is starting to go haywire, so I don't know if that's causing a disturbance. 1 second. I don't know. Okay. Right. So let me know if there's any pairs that you want me to go through in particular. We're just waiting for Lagarde to her speech to come. I presume it will be released as a written text that we can. Well, I mean the headlines will be drip fed through the various channels, and we'll keep you abreast of those. Right. So with regards to the cable, let's look at that then. Right. Sorry, I'm trying to sort out this fan here. It's making a lot of noise. Right, cable. So we've broken structure over here. So we're technically in a bearish environment, confirmed by that break of structure. All right. So I'm looking for fading any rallies. If we get any rallies up into this impulse, I'll be looking to fade, looking to sell rallies. Um, as it stands, I mean, we're coming in close to, or relatively close towards that support line. If we do get a pullback from here at this point, you've got 124 as a potential firm resistance area as per the Fibonacci retracement. This is on the daily chart, but for the day ahead itself, sorry, that's the weekly chart. Let's look at the daily chart. 123 as key resistance if we were to get a pullback at this point. So mark that area as 123.21 on a stop hunt up into the 50% mean reversion area if we were to get a pullback. That's on the daily chart. 4-hour chart. We've got near-term resistance, potential resistance up in here. Dear, oh dear. And then above there, this candle here, I'm trying to get as close as I can into the 122.50s, looking for structure around there. So looking for fades below 122.50. All right, so it's been a pretty volatile start, hasn't it? Uh, London dumping, gap time moving up into the resistance, and the price subsequently dropping from there on renewed dollar strength to target the lows of the day down in here. All right, this is on the hourly chart now, so not long before this speech. So no real bias at the moment. I mean, unless we can break below the lows of the day, then we might well be sideways, given that it is Monday. And let's have a look at we've got 1, 2, 3 days of shorts in the market. I mean, we might be down low to come up for a short squeeze for the session ahead. So we'll have to monitor that. So let's mark out the high of the day so far in our US session, 122.27. Not seeing chart. Well, let me try and let me resend it. So I'm going to resend the chart. All right, you should be seeing it now. Let me know. Can you see the chart now? Anyhow, so for me, I'd be looking for longs, but we'd need to see a slowdown in this move lower, right? So until we get a deceleration, then I'm not going to want to stand in the way of this move. This can quite easily be a continuation trade for a test of 121.90. But if we do start to see this decelerating, then we might just get an opportunity to get involved with a short squeeze in the Wall Street Open or in and around the Wall Street Open. And that low, by the way, is that wick in this area of potential demand as per that activity from back in March. Okay, so that could be a demand area that we're about to come and test. So looking to buy in here, really. So let's see, keep that on the watch list and see if it's going to decelerate for us in today's trading. Right. But let me to summarize, however, I'd prefer to be selling rallies rather than buying the dip because the momentum is with the bears and the US dollar going long, and we're in a bearish trend, right? So, but there can be opportunities to buy the dip um, for a session trade. Right, euro. This will be the same scenario. So I've got this as a continuation trade into support. We're looking at a test of 106 as per the Fibonacci measurement of that correction. So I've measured from top of the correction. So we came down impulse, bullish correction. I'm measuring the corrections high to low of the impulse, and therefore the continuation trade to come in and target a break of 106 and potentially come in on to the minus 61.8 for a test of 105.70, and that could happen today or tomorrow. But again, the same scenario, it's dumping before the open on Wall Street. So we've got, presumably the US yields are trying to recover here. That's the 2 year and the 10 year making fresh highs in the last hour ahead of this speech from Lagarde. So to really sort of nail in the coffin for the euro, we want to hear something dovish out of Lagarde, which is coming up in 12 minutes' time. So the market is in anticipation of a dovish outcome, presumably, and that's giving the US dollar a lift and weighing on the euro. Okay, but as I said, like with cable, we're getting this drop before the Wall Street Open, which is in what for 40 minutes or so. Um, so we're getting a downside extension. So we've broken structure on the outside here. So we came down, we broke these lows as a continuation, right? So we pumped back up, which is very common. So you get a displacement out of prices being agreed, a displacement of that. So the market's showing you the hand, its hand, right? And then a drop and then a pump back up into the origin of the move or thereabouts. And then we've got further selling at a premium price for the continuation lower. And then on that hourly correction, we can measure from top to bottom. And we can pick off our target area between the minus 272.2 and 61.8. Now, once we come into here, there could be opportunities. So if we get selling pressure into the Wall Street Open, then we could be having a session trade for a short squeeze for the day ahead. If not, this will just steamroll and continue for a test of 106 like we were talking about and 105.70. Okay, but as with cable, I'd prefer to be selling rallies. So we can buy the dip, but I'd rather be weighing in on a pump up to continue lower for a day trade, if not a swing trade. Um, Dollar CAD. Oh, no, sorry, let's do good first. Well, the rallies in the euro, I would look to prior resistance. So I've marked that green for some reason. So prior resistance is up in this where prices were last agreed. However, since coming up into there, we've sold off aggressively. So this is what I mean by I'd rather be short than long. So you've got resistance up in here. So the path of least resistance is likely to the downside. Once we come into here and pump up, then we're looking for a run further to the downside. There's more room to go to the downside than to the upside, if that makes sense. So, I mean, if we want to pick off levels for upside targets, well, then first of all, you can mark off that candle there on the 15-minute chart at 106.30-ish, in and around there. And if we come deeper into that drop on the 5-minute chart, first resistance is going to be in and around here. And we've got the trend line that would need to break as well. And then on the 1-minute chart, coming right in. So we've got this W formation, a bottoming pattern, which may see the price come back in towards the neckline. Right, so we're looking for peak formations lows on the lows. Oops, what's going on here? Get rid of that. Right, so peak formation lows. So this price can come back in and continue up, if that makes sense. So I'll try and do that properly with the arrows. So perhaps a double bottom. That sort of scenario. Okay, so still, I mean, we've got half an hour or so to go until Wall Street open, and we've now got 5 minutes before Lagarde. So no idea what's going to happen, but this is the sort of bullish scenario for the session ahead. But I'd rather, like I said, be getting short of rallies. So, I mean, ideally, you'd want to see the price come right back up, but and then getting short. But given the momentum in the market to the downside, you may not get that. So, you may only be getting into the 30s for shorting from there. But let's see what happens. Right, gold. Gold, gold, gold. And I apologize about this noise of my fan. It's very frustrating. I don't know why it's going mental like it is. I don't know if you can hear it on the other end, but it's pretty distracting at this end. Anyway, so on the weekly chart, we're in a broken down market. So if I were to be position trading this market, I'd want to be short, getting short in and around these highs in the 30s, 1930s, for a continuation to the downside. Impulse correction. So we're in the corrective mode at the moment, but I'll be looking for shorts, and that's in line with the fundamentals at the Federal Reserve and the divergence. We've had a dovish outcome out of the Bank of Japan, European Central Bank, and Bank of England. All right, so we're sort of in this channel to the downside. Daily chart. Yeah, the daily chart is a much more mixed outlook, given that we've um, tentatively broken structure on the downside, but we've pumped right back up again pretty firmly up into resistance. So, given that pump up, I wouldn't write off a. So, let me draw it. Let's clean up the chart entirely. So, pump up, pull back into support, move up. So we can't write that off until this market flips and gets below these lows. So I'm going to put that, sorry, that should be green for support. So we need to get below support. So to only really be comfortable, well, let me put this on the 4-hour chart. See if we can pick off some levels. Right, I would like to be getting short if we can get below that low there. So 1919, and therefore that would semi-invalidate that bullish outlook. So getting short below there on a pullback perhaps for continuation. That would be on a swing trade. Something that I'd hold on to for, well, as long as the downside remains intact. Maybe working my way into the trade for a downside continuation below those lows. Okay, so that's a bearish thesis for gold and a potential sort of setup opportunity. So a break of that structure there, you'd have this M formation. You'd have this potentially as resistance, could be a neckline of an M formation. So sell limit to go short. On the day itself today, so maybe we're pumping up into the Wall Street Open for a shorting opportunity. I mean, we started out the day short. We're pumping up into those shorts. We've got the short squeezes already on, but it's a break of structure that we got. So sell high opportunities for the day. All right, so selling at the high of the day could be the way to play this one. A bit of a no-brainer. Let's see how we're set up into the Wall Street Open. In that regard, if we're looking for that trade setup, we need to see, I mean, we've got this peak formation over here. We've got a peak formation potentially here. So in this regard, this is the 5-minute chart I'm drawing here. Sort of still front side-ish of that bullish move. And we've got structure in here. So ideally, what I'd like to see from here is some topping and deceleration of this bullish rally, and let's say, so we've got one, two, so maybe a third push up, and then forming higher lows and a break of those higher lows to come down. Right, so that could be an outcome for gold. Um, I just want to see if we've got anything out of this speech from Lagarde. Give me a second, I'm going to look into that and see if there's any commentary on the wires. Excuse me. Right, not seeing anything out from Lagarde. Um, and I'm double checking that she was indeed speaking because we should be seeing something by now. Uh, yeah, I've got it on other calendars as well. Domestic price pressures remain strong. Inflation continues to decline, but it's still expected to remain too high for too long. We aim to conclude this review of the framework by spring. Uh, Labour market has so far remained strong. Right, well, a bit of a mixed picture there. I mean, because we've got ECB Schnabel coming out with dovish commentary, and that seems to be underscoring um, a dovish bias, and the euro is under pressure. So you see that it's coming now into our targeted area pretty firmly. Right, so, but I'd be cautious trying to get short of this. We're already low. I mean, the trade has already taken place. I mean, the that would have been up in here, getting short up here. So, like I said, we're looking to buy the dip to sell the rallies. But so we'll wait to see how the land lies later on in the day. Right, dollar CAD. I'm being asked. Um, yeah, so dollar CAD is one of the well, if not the only pair that's giving a mixed scenario with regards to the dollar. Um, in respect of the price action and recent developments, we broke these lows over here. So we pumped up, we dropped, we left an M formation, so that didn't lure in the bulls. Instead, this continued firmly to the downside with strength from the Canadian dollar, Now we've moved back up into that displacement, into resistance. So if resistance were to play its role, then we're looking for a downside continuation. But that's in a US dollar bullish environment. So it's counterintuitive to be looking for shorts, but that's the technical outlook. So it's probably a pair that I don't really want to be involved with. It's not. It's giving too many conflicting scenarios. Fundamentally, technically counterintuitive. So yeah, that's a tricky one. Not something I really want to be involved with. But you trade what you see, and if we see a setup and we've got this break in structure, like I said, but even on the day itself, we've got this break of structure in here. We dropped, we've pumped up. So essentially, we're getting the same scenario on the hourly chart than what we've got on the daily chart, right? So the daily chart, as I said, we've got that displacement. We've pumped up into resistance. On the hourly chart, we've got this displacement. We've pumped up towards resistance. Perhaps we've got more to come to the upside, which would make sense in a US dollar bullish environment on the day itself. And we can draw Fibonacci's on this. So resistance in and around the 50% mean reversion mark. So we're coming up close to that 134.70s. In fact, we've already come up into there, but we seem to be continuing to pump up. Beyond there, we've got um, the origin of the drop, which is this candle, this purple candle there, that last up candle before we dropped. So yeah, 134.70s. I don't want to pick a level. I'm just going to say the 140.70s. 134.80. Yeah, if I have to pick a level, then so around about 134.80. So it's a pump up for the continuation to the downside. But again, that's conflicting against a US dollar bullish market. Yeah, I'm afraid I don't know why you're not able to see the chart. Doesn't make any sense. Others can see it, and it appears that you're the only one that can't see it. So I don't know. I mean, can you usually see the chart when I share it? I'm speaking to CCU. Okay, JR is getting the weird boxes. Right, I'm going to reshare my chart. Let me see if that fixes it. So, 1 second. Right, so I've reshared it. Let me know if those weird boxes have gone. Right, UK 100. UK 100. UK 100 all the way into these highs. And we got resistance over here. That's on the daily chart. So dropping into that void. So by all means, this can come lower on the day itself. And we are coming into, okay, we've got potential support down here as well that we're targeting. Okay, so this can easily continue lower, but I'll be looking to buy the dip on a deceleration of that move in and around here, and then selling rallies, and then resistance on the hourly chart first point of resistance contact is there for this area of premium prices if this were to come back up for a shorting opportunity. Uh, Oil, so we're in a technically broken down market with, this is WTI I'm looking at. This is the hourly chart. So we've broken that structure aggressively to the downside. So we broke that structure there. We've come back up. We've pumped back up, looking for a downside continuation from resistance. Right on the day itself, we've broken the lows. So a pump up ahead of this Wall Street open is the recipe for a shorting opportunity for the day ahead for a session trade. So drop, pump up, looking to short from the highs of the day, of the US day that is, in and around this resistance area. Okay, so I'm not saying just sell it when it gets up here. I'm saying there could be a setup forming. So a move up, a pump up, and then a deceleration of that pump and bearish structure with upside failures confirming the bearish bias for a shorting opportunity. But you're going to need to wait for that structure and opportunity set up to set up, right? So pump up. So we're going to be looking to see if, first of all, if we break this trendline resistance, which we have, right? So we're actually in a bullish environment for the meantime. So we broke that structure, right? So we've moved up. So this becomes a counter trendline support. All right, this is broken structure. Right, so, but if we start to show signs of deceleration in this move up, then we're looking for the continuation to the downside. Right, so I'm going to leave it there. We've got 15 minutes until the open. I've covered the majority of the board there for you guys. So hope you got some value out of that, and appreciate you for being here. And I wish you the best for the day ahead. Okay, see you in the other chat room. Okay, thank you.